Hello and welcome to This Week in Market. For the first time since a full-fledged war broke out in West Asia around February end, we can say that Indian markets were driven more by domestic reasons rather than geopolitical tensions this week. Why we say this is because on Wednesday, April 22nd, Trump announced an indefinite extension of the ceasefire with Iran. Oil prices fell sharply after that, with Brent briefly dropping to around $94-$95 per barrel and a similar fall seen in US oil as well. But Indian equities did not see any relief rally. In fact, between April 22nd and April 24, the Nifty 50 fell nearly 2.7%. And this fall was largely because of the sharp sell-off in IT stocks after modest Q4 earnings from India's IT majors such as TCS, Infosys and HCL Tech, along with weak management commentary and concerns around FY27 growth. That said, we are not saying geopolitics is out of picture. As we record this video, planned talks between US and Iran are yet to begin in Islamabad, and Brent crude is again trading around $105 per barrel. So the war risk is still very much alive. But this week, the market trigger clearly shifted from geopolitics to earnings. For the week, the Nifty 50 fell around 1.9% while Sensex declined around 2.3%. Broader markets held up relatively better. The mid-cap index was down around 0.6% while small caps slipped just about 0.2%. The biggest pain came from IT. The BSE IT index crashed nearly 10% this week, making it the worst performing sector. HCL Tech fell more than 16%, Infosys dropped over 12%, Tech Mahindra was down around 10% and TCS slipped over 7%. The issue is not just Q4 numbers. The bigger worry is that management commentary across IT companies has turned cautious and markets are now questioning FY27 growth visibility. Sectorally, not everything was negative. Power gained nearly 4%, FMCG rose around 2% and capital goods also ended higher. On the other hand, auto, consumer durables, realty, metals and banks ended in the red. Among Nifty gainers, Nestle India was a standout performer, rising over 10% after a strong set of numbers. Dr. Reddy's, Tata Consumer, Trent and Cipla also ended higher. On the flow side, FIIs were again net sellers this week, selling around 1,369 crore rupees worth of equities, but DIIs continue to provide support, injecting nearly 9,782 crore rupees into the market. So liquidity support from domestic institutions remains strong even as foreign investors continue to remain cautious. Coming to the macro side, crude was a big swing factor. Brent crude rose over 16% during the week and is now trading around $105 per barrel, while the rupee also came under pressure, depreciating around 1.4% against the US dollar. From a technical perspective, the Nifty has clearly lost momentum after a recent pullback rally and has slipped below key short-term averages, indicating some near-term weakness. According to brokerages, the 23,700 to 23,650 zone will act as a crucial support for the index. If this level breaks, the next downside support comes in around 23,300. On the upside, 24,200 to 24,250 remains an immediate resistance zone, and only a sustained move above this can revive fresh bullish momentum. So effectively, markets are now entering a range-bound phase with a clear battle between support and resistance. Coming to what lies ahead, next week will be a truncated trading week with markets shut on May 1st for Maharashtra Day. And importantly, the earnings season is picking up pace again. Key results to watch will include Larsen & Toubro, Titan, Asian Paints, Kotak Mahindra Bank and SBI, along with a number of mid-cap companies which could drive stock-specific action. That said, earnings will not be the only trigger. Markets will also be closely tracking developments in the US-Iran situation and any movement in the crude prices from current levels. On the macro front, India's IIP data and global PMI readings from US, China and Japan will be in focus. Globally, central bank action will be key, with the US Federal Reserve, Bank of England and European Central Bank all set to announce their policy decisions next week. The key question now is, can the Nifty hold about support zone or are we looking at a deeper correction from here? That's all for this week. Stay sharp. I'll see you next time and stay tuned to Fortune India for all the updates from the business world.